Hello traders, welcome back to the channel. This is Vishal and I would like to wish all of you a very happy, prosperous and profitable new year ahead. Now let's start today's weekly sectoral analysis. Before going ahead, I would just like to share one thing with all of you that today's video is going to be very important. The reason for that is generally when overall market is in an uptrend, my method is to look at sectors and its stocks probably to go long. Nifty is obviously has bounced back from a support, but there are few sectors which are not performing. All right, and as a trader, we need to understand that when all the sectors are not performing, you need to keep your trading portfolio long and short both, which is called long short portfolio. Okay, so today's educational video is going to be very important and a little bit different. So kindly watch till the last. Okay, let's start with Nifty futures. In the monthly time frame chart, the Nifty future is looking pretty okay. The trend is up, no problem in RSI. Overall, things seems to be pretty fine. If I switch down to the weekly time frame chart, we can see that this is a very massive trend line support which has been holding since March of 2020, and it has been tested multiple times. You can see this is the first time it has been tested. Second time is somewhere over here, all right, and this is the third time, and we have seen a decent bounce back almost from 17,830 to a high of recent 18,368 or 370. Now in terms of trend, Nifty futures is in an uptrend in the hourly time frame chart, but I would say that it needs to consolidate more. It needs to go up and down. Sideways movement is required more before it goes up. The reason for that is the volatility is still high. If you compare the size of candles, basically, that is the most easiest way to understand. You see the size of these few candles over here, okay, these few candles. And if you see the size of these candles over here, is there a difference? Yes, there is a difference, which means the volatility needs to come down. And generally a trend, an uptrend with a low volatility is generally a very good prospect to trade on the upside. So I think the volatility needs to come down. That is the first point. One important thing is that this particular support band, which I had shared with all of you, and the coordinates are 17,877 to 17,614. It has been respected very nicely. In fact, just from the upper level of that particular band, you can see the decent bounce back in Nifty futures. Now, the bounce back has occurred. The question is, has Nifty futures bottomed out? So once again, we need to understand that 18,277 to 18,117 is posing as a stiff resistance for Nifty futures. So for me, we need to close above this particular band. You can see there was a try by the Nifty futures on the 30th of December, but it was not possible. So we need to close above this possible high. And if we continue going higher, and even better if the volatility crashes down, then we can say that yes, Nifty future has resumed its uptrend. All right. Now let's see all the supporting sectors which are trying to support for the Nifty to go higher and few sectors which are not supporting. First, we'll look at Bank Nifty. Bank Nifty in comparison to Nifty futures is certainly much more stronger. You can see the state of trend, the way it has gone up, the Nifty futures, the way it has gone up, and in comparison to that, Bank Nifty futures has gone up. Bank Nifty futures is certainly much stronger than Nifty futures, but yes, you can see again the size of the candle is the problem. You can see the size of these candles are problem, and generally when when markets need to go higher, the volatility should always be low. You see the size of these candles, right, and compare with the size of these candles. There is a big, in fact, massive difference. So this difference needs to come down. This is the first thing which should happen. Now, in terms of levels, I had shared my support for Bank Nifty futures, which was at 41,728 to 40,862. This was the support band. And from there, in fact, exactly from there, you can see there has been a very big bounce back in Bank Nifty futures, which means that the support band which I had shared has been respected by the market. Now, again, I would say, if you see the RSI, it has just dropped down. and gone up. So if there is a consolidation, drop in volatility, same thing I would like to repeat, which I said in Nifty futures. If it happens over here and then it goes higher, it will be better. Now, when we talk about Bank Nifty futures, generally we need to understand which sector within the banking pack is helping the markets. In my last educational video, which I shared, I think last Tuesday, I had shared few stocks in the banking, in the PSU banking pack, especially, which I had told that they need to go higher, and then you will be able to initiate a decent swing trade. I think those stocks were SBI. You can see SBI has performed pretty nicely, and the other one was Bank of Baroda. Both have been able to perform pretty decently. That's no problem about it. Again, if you are holding a swing long trade in PSU banks, you can continue to hold them. And as the prices go higher, your stop losses will also raise. If you get stopped out in this process, just come out. But as a trader, I am not yet ready to initiate a positional trade in PSU banks because the volatility in the PSU banks is way too high. And I assume the way it has rallied, it needs a lot more consolidation than just a drop and then a sudden rally. Some sort of sideways consolidation, if not a correction, at least a sideways consolidation is very, very important. So PSU banks will remain on the radar just as a sector to look on for probable swing trades and not positional trades for time being. Okay. Private banks, the way it has rallied, it will need lesser consolidation in comparison to PSU banks. The volatility in the short term is very high. You can see, yes, I can agree with that. In the short term, it is high, but in the medium term, the volatility was not that high. And if you check, this is the resistance band in the private banking pack, 21,971 to 21,893. So this particular resistance band has been surpassed, but not very, very convincingly. I think a close above this particular high of 22,100 and 304 will be more encouraging. I think as a swing trader, I would like to look at two stocks. One is Axis Bank, and for swing trade, I think you can look at the hourly time frame chart. You can see there has been a try by the Axis Bank to go and close higher above this particular band, which I've shared over here, but there is a continuous resistance. So I think in the hourly time frame chart, if you have a close above 940, 943, and if it sustains above that even in the next hour, then possibly we can see a decent rally in the Axis Bank. Now, one another stock from my side in the private banking pack is going to be HDFC Bank. HDFC Bank, this is again an hourly chart. Generally, guys, I don't share hourly charts in the weekly sectoral analysis, but this is the time when not a lot of positional trades are visible. So as a trader, I would like to shift my attention to swing trades. You can see that there was a trend line breakout in the HDFC Bank, but it was not able to go higher. The reason for that was this particular resistance band, which is from 1645 to 1639. So I think we'll need to close above the 1645 level, something like this, and then possibly we'll be able to see a decent rally coming up. And the main reason is, you can see this is a resistance, this is a new resistance basically, all right, and even over here we can see some sort of resistance coming over here. So HDFC Bank is the stock to keep watch on as a swing trader. Let's head to a different sector now, metals. Now, metals have been one of the most strong sectors, and in fact, even when the market was correcting, in fact, even the pullback had not started, I had clearly mentioned that metals are one of the very strong sectors, and you can see that this particular support band in metal pack in the daily chart, 6251 from 6102, has been respected. Yes, the last candle has been a shooting star, I can understand, but the reason for that is the recent high is acting as a resistance. And I had shared one stock with all of you in my previous video, which was Tata Steel as a swing trade. And you can see that Tata Steel has worked pretty nicely. I think probably 111, 112 the trade would have come, and from there has rallied to 114.75. So as a swing trade, at least you can say the initial first targets has been achieved. People who are trading in Tata Steel should be trailing the stop losses, and maybe when prices go higher, you can think of booking your rest of the profits. Okay. Auto and yes, before I go to the auto pack, one more thing. All other stocks in the metal pack, you can see the Jindal Steel and Power, it is already outperforming, and even JSW Steel is still outperforming. So as a trader, if there is any consolidation, any drop in the metal pack on the downside, and they are available at a very good, decent levels with the risk reward is really good for a swing trade, I would like to go long in these stocks because metal pack is looking extremely, extremely strong at this moment. Okay, auto pack. Now, if I have a look at the auto pack, uh, both of the time frames are showing completely different state of trend. If you look at the weekly time frame charts, weekly time frame chart, the trend is completely flat. Okay, and it is trading at a support. You can see there has been a selling pressure over here. Okay, due to the previous highs, and now the same level is now acting as a support. You can see over here, right? So I can agree that in the medium term, it is at a support, but in the shorter term chart, in the daily time frame chart, it is at a resistance and the trend is down. The trend is down in the daily time frame chart and the trend is flat in the weekly time frame chart. Again, you can see there was a support initially over here and from there it has been a bounce back. So now the same zone is acting as a resistance. According to me, I just went through multiple of the stocks. I just found one stock which was interesting. I would like to share that with you, which is Ashok Leyland. Ashok Leyland is a stock, I think overall it is looking okay in the weekly time frame charts, nothing wrong in it. But in the daily time frame charts, I can see that there is some sort of trend line resistance, going around somewhere over here. You can see multiple times there has been a short-term sell-off happening, very, very short-term, right? So I think same thing is possible over here. If it consolidates more for 2-3 days and then if we see a downturn, then I think swing traders should think of possibly, thinking of a swing short trade on the downside. But again, please understand the overall market is at a very high volatile rate. The entire market is also very, very choppy. It is trading between a resistance and a support. So generally, these times are not very good time to make money. So if you're initiating, please put your own analysis. Please think of your own stop losses, your own targets. And one more thing, as a trader, at least I would like to reduce my position sizing to 50%. One thing is that, and if I don't want to do that, I would like to hedge my positions properly. So in fact, if there is some volatile move happening on either of the side, at least my positions are properly hedged. All right. Okay. Let's go to the IT pack. IT pack, I think in the long run, in the long term chart, the monthly time frame chart, nothing much is happening. It is just consolidating. In the weekly time frame chart, if you check properly, the trend is now down and it is on the verge of a medium term breakdown. You can see this is the support 28,083. If we close below this on a weekly time frame chart, then we will be able to see lower levels. I think one stock which I can see, Wipro, there are other stocks also which are not looking great, but Wipro as a stock, it has been able to bounce back and is at a resistance. So if it consolidates for a couple of days, if the volatility comes down and then if it starts turning down, again, we'll be able to see lower levels, maybe around 384 and 376, but it will need to consolidate first. If it just goes higher, because you can see there is a support over here. Okay. So if it goes higher, just leave it. But if it consolidates and then if there is a breakdown in the shorter term chart, one can think of a downside trade. Again, please hedge your positions or at least reduce your position sizing by 50%. Do not forget that markets are between support and resistance. Okay, finance pack. Finance pack, I think, has been able to bounce back pretty decently, but according to my analysis, financial pack needs to consolidate more. It needs to reduce its volatility and then think of going higher. Pharma pack, again, I would not like to comment anything on the pharma pack. I'll just talk about two stocks. One is Sun Pharma and one is Cipla. Sun Pharma, if you see, it is still consolidating as expected and it has not broken the support band from 992 to 964. So the day it closes below 964, 954, probably some problem will occur for the Sun Pharma. Cipla, on the other hand, has underperformed. You can see it was not able to stay higher. Still, we are at a support band. We have not been able to break it. So from 1081 to 1068, giving a little bit of buffer to it, you can say 1065. So if we close below 1065, then maybe some problems could occur for Cipla. Realty pack. What a sad story. I think Realty pack multiple times has been, going up and coming down, and it shows itself as a promising sector, probably that it will act as a outperforming sector, but it is not able to do that. And if you check properly, this is the first high, this is the low, this is the high, this is the low. So as a trader, if you apply Dow theory, then you will understand that this was the higher high, this is the you can say first low, this is the second high, this is the third low. So it has already been able to make actually a lower low. So now after the lower low, it has been able to bounce back. And in my previous video, I had shared that you will see probably a very sharp bounce back in the Realty pack. And that is what has happened. You can see from 409, it did bounce back till 434. Okay. So if it consolidates over here for some more time, because this previous low is acting as a resistance over here, if you can mark. This is this resistance band basically. So if it consolidates around that area and then it goes on the downside, if there is a breakdown, you will need to find stocks which are showing same patterns on the chart in the Realty pack, and then probably you can think of a downside trade. Again, please put your own analysis. This is just my view. I'm not sharing any trading calls, nothing. I'm just sharing my view. You have to put in your own analysis, your own levels, your own stop losses, your own position sizing, your own hedging. Okay. One stock which I will share with all of you is DLF. It is showing sort of similar patterns in this area, but if you compare the Realty pack with the DLF, then DLF is still a better stock in comparison to the entire Realty pack, because it has not been able to make a lower low, but still it is available at a resistance, and then possibly it is also making some negative candles over here. So it needs to consolidate. After a consolidation, if it doesn't go higher, starts coming down, you can fancy your chances over there. FMCG pack. Now, FMCG pack, I think, let's have a look at the monthly time frame chart. The monthly time frame chart, things are looking okay. Yes, we have one red candle over here, but nothing worrisome till now. In the weekly time frame chart, if I go, the trend is now flat, and possibly it seems it's trying to come down and go sideways, reduce its volatility, consolidate. All that sorts of thing is happening. So in this particular stock, I would like to share my view on ITC. ITC is, I think, trying to consolidate after a very large trend, because generally after a very big trend, good stocks, rather than correcting, they go sideways, consolidate, and after the consolidation is over, they go higher. So that's what is happening in ITC. So again, in ITC, I would not like to do anything. But in Hindustan Unilever, I think the stock is looking okay. It was looking really good when market was higher, and when even Hindustan Unilever was, hovering around 27 or probably around 26.73. So it was looking really attractive, but due to the overall selling pressure in the market, the stock has come down. It is available at a support band. It is available at a support band, and it is a very decent support. So in case if there is a decent bounce back on the upside, I'm not saying to buy over here. If there is a bounce back, if there is a decent breakout in the shorter term chart, then probably swing traders can have a look at this particular stock. Consumption pack, I think it is consolidating in medium term. It is clearly visible. No trend is there in the weekly time frame chart. In the daily time frame chart, it has broken the previous support band, came down, went back, and it is trying to again start a new sell-off. It needs to consolidate more, although according to me, if it consolidates and start the new sell-off, again you can find stocks in the consumption pack for the downside. But wait for the breakdown. Do not ever sell its resistance or buy its supports. I'm not a very big fan of that, because sometimes what happens is if the higher time frame chart starts acting in the market and a very good buying happens, what will happen is you will possibly buy at this zone and the sector or the stock will keep rallying. Makes no sense, right? So let this price confirm itself. Let a small breakdown happen in the smaller time frame chart. At least the price give you the confirmation. When price gives you the confirmation, then a trader should act on it, not otherwise. Infra pack. Infra pack is one of the stronger looking sectors according to me, but I think it is not ready as yet to go higher. It needs to consolidate more. I have seen few stocks from it, but I think all those stocks need to consolidate first, so there is no point of talking about them as of now. When the right moment comes, I think when the right time comes, I'll probably share with all of you in the next educational video, but let it consolidate. I'm not in a hurry to take any positions in the infra pack. If they go with a vertical rally or something suddenly, then probably I'll change my mind and then I will share it in my another video. Mid cap pack has been able to bounce back pretty decently from a support band. You can see this is the previous low, and even over here it has been able to bounce back. Only problem is the volatility has increased very high. You can see especially this candle. After that 4 candles, you can see the size is pretty small. So this is what I want to see. The consolidation should happen, the volatility should crash down, and then if we see a rally, maybe again mid cap index will start looking good. And once again, I would like to repeat to all of you that overall state of trend in Nifty futures is pretty much range bound. We are trading between a support band and a resistance band, and generally when market is within a support and resistance, it is not a very good time to trade. Even for a short term swing trader, you need to understand that you will make most of your money when markets are trending either on the upside or either on the downside. When we are in between support and resistance, when we are consolidating, when the market is trying to prepare to trend, because 30 to 40% of the time market trends, 50 to 60% of the time market prepares to trend. So when markets are preparing to trend, it is not a very good time to trade. And you must have seen in today's video that I have scanned through all the important sectors, but I'm just looking at one single stock, not all the stocks, just one single stock. Why? Because all other stocks are just going haywire. So as a trader, you need to understand and accept the fact that this is not a very good time in the market to trade or to make money, and stay quiet, stay low. And even if you find a very high probable trade, deploy only 50% position sizing or hedge your positions very properly. All right. Put in your own analysis, your own levels, trade wisely, stay safe. Thank you.